Oh, today we have a good one, and I know that you guys are gonna absolutely love what it is that we're about to drop. Today we're gonna be going over a tool that I have been using this entire year. So for the past 7 to 8 months, I've been using this thing nonstop, and it has drastically changed the way that I trade, whether it be scalping in the markets or trading binary options. Absolute game changer. And it's such a simple tool. So easy to learn, so easy to understand, but yet can increase your profits by God knows how much. So sit back, relax, and enjoy the video.
Feel just like a rock star.
Hey, what's up? What's going on, guys? It's your boy Rico, aka RockStarrProfits, here, back with another video. And as I've already mentioned, today we're going to be going over what has become one of my absolute favorite tools to use when trading, like literally favorite. I don't trade without it. I usually don't do videos like this at all, like promoting other like products or services or tools or anything like that. If you look at my channel, I've never done any video like this, but this is literally a tool that I have been using for the past like 8 months that honestly, I'm like, you know what, I gotta share this out. And I know for a fact it can help so many people out there when it comes to scalping in the markets and improving in terms of getting those nice, good entries to be able to get in and not have to question yourself as to if you might get reversed out or spiked out or whatever the case may be. It's a tool that has literally it's really given me a lot of confidence when I'm trading in the markets, especially because I trade binary options. And we know with binary options, it's very much time-based. You have to have those high probability positions. And for a lot of new binary options trader, the biggest issue is always getting in at the right time and just having that reassurance of knowing, okay, everybody or orders are going in a certain direction, momentum is flowing, this is where I should be getting in. And that's exactly what TickStrike does. So TickStrike is a tool that literally shows you live as the markets are flowing where orders and momentum is going, literally in real time. So here we are. I have my trading view charts up on one side of the screen, and right here, as you guys can see, this is my TickStrike dashboard. Now, what's really cool about the dashboard is, as you guys are going to see, they have everything from Forex, let me make this bigger, Forex pairs, crypto pairs, futures, stocks, ETFs, you name it, they have it. It is on here. Now, I personally am a Forex trader, and I trade mostly the main currency pairs. And you can come into the dashboard and you can activate individual pairs here. As you guys can see, I have the main pairs activated, and you can come here to the actives tab where it will only show you the currency pairs that you have activated. Now, aside from the actives tab as well, I personally just use the entire dashboard as it is because I have multiple monitors here. So I usually keep my TickStrike up on a different monitor, which is why you guys never see it while I'm trading. But let's say you don't have, different monitors, or maybe you focus in on maybe just a couple of pairs. What you can actually do is you can come into the settings here and have a pop-up window for those specific currencies. So if I really wanted to, I can actually keep them right on my chart if I wanted to, and see it right there in person. So it's like little micro boxes, if that makes sense. So you can pull up little pop-up micro boxes, and you can actually connect the micro boxes as well. So if you wanted to group them together, right, you can do that and move all of them together. Move them to the top left, side of your screen if you want, and you will have that literally on your screen as you're trading. I personally, like I said, I keep the entire dashboard up. I don't really use the pop-up windows too much, but that is just my personal preference. Now let's look at this bad boy in action, because I think this is really what takes the cake. For me, it's absolutely insane. Now, right now, it is about 2:30 p.m. So obviously, probably not the best time to trade, but we're just gonna go ahead. We're gonna follow in what TickStrike is telling us, based on the charts. And obviously, we see here, we have some kind of, there's some kind of movement going on in the markets between the different pairs. Right here, you're gonna see the sensitivity of the actual push. I have my sensitivity right now set between medium and high sensitivity. Whereas again, pretty much based on where order flow is going, you can have the sensitivity pretty much turned either up or down, saying, hey, you know what? If it's low sensitivity, only alert me when, we have a sensitivity of 12, which is a very strong push in that direction. Or if you're in, because I know a lot of you are in probably for like 1 minute trades, maybe even less, you could put a higher sensitivity that will alert you with even some of the smaller, pushes in the market as well. So you can change the sensitivity on that. For this training, I'm just going to change everything to 6 so that we can see how orders are coming in on a medium aspect. What I personally like to do, which is why I have to change all these, is that for my entry points, I'll put it a little bit more sensitive, being that I'm scalping in the markets. I have my confirmations and everything like that. So I have my entries a little bit more sensitive. And then when it comes to reversing or the markets like trying to spike me out or anything like that, I'll increase the sensitivity to only alert me when there's a strong push in the opposite direction of where I'm looking to trade. So let's look at what we have here. So what we have here is very simple. You guys see, I'm going to go ahead and go with AUD USD. We have a -7 sensitivity on AUD USD, which means AUD USD should be pushing down. Now, as you guys can see, as those ticks start to come in, we just got -8. We're starting to get that drop more and more in the markets. And obviously, again, the higher it is in terms of like the sensitivity wise, the more you hear this thing clicking and going off, obviously the stronger the push you know is going down in that direction. Now, again, this is 2:30. It's about to be 3 p.m. Eastern Standard Time. Markets are going to be closing in about an hour and a half. So again, not the best time to trade, but we still got some kind of movement. This is actually perfect right here. So if you guys know anything about correlating pairs, this is one of the biggest ways that I use this product right here is to look at pair correlation. I trade a lot of Euro USD and GU. So when I'm using this, I want to see EU and GU showing me the same thing, which is green pushes to the upside. And you guys are seeing this nice big push right here on Euro USD. And then USD CHF is a negative correlating pair between those currencies. So I would want to see USD CHF going the opposite way. Now, obviously, as you guys are looking, this is exactly what it is that we're getting. I know my head is kind of blocking it a little bit. If I take this off, you guys can see it better. But we got EU pushing up, GU pushing up, and USD CHF pushing down. So you can use this for pair correlation as well. And again, getting those better entries and pairing it up with your strategy. The meter is pretty high in the buying area for both EU and GU, and really, really low on the selling area of USD CHF, which is again telling me for this trade, this is actually a good trade to go ahead and be able to place for a buy. So here you go. A few minutes later, we went up for a few candlesticks, as you guys can see. And now look at this. Watch this. I guarantee you, we got GU pushing down. I guarantee you're going to see EU start to push down as well. And then you're going to see USD CHF start to push up. This is what I absolutely love about this. You're getting to see some of the bigger players in the markets where orders are being pushed, and you're sitting from the comfort of your home. You're sitting in your house, probably have no idea what everybody else is doing in the markets, whether they're buying, whether they're selling, or whatever the case may be. This is literally, in my opinion, the currency strength meter on steroids. A lot of people usually ask me, do I use currency strength? I personally do not use currency strength, but I 1000% use this right here. And as you guys can see, look at what's happening right now in the market. So after that small push up, this is why it's so good for scalping and binary options. I'm telling you, after that small push up, we're now starting to see sells coming in on GU, buys coming in on USD CHF. So what do you think that's going to tell us about Euro USD? It's letting us know that we're getting that pullback right there on Euro USD. And look at that. So you would know to either, again, start scalping some profits off of that, whatever the case may be, or maybe even close your position because we're starting to get the pullback. So again, this is just me randomly showing you guys. I just want to give you a behind the scenes insights look of it. And I know some of you have already seen it on my social media, like on Instagram stories, especially when I went ahead and did a live stream with it running in the background. I had a lot of people ask me what it was. So this is what it was. My favorite tool to use while trading. And if you guys want more information on it, there's a 1-hour webinar that I actually cut up and condensed it into about 10 minutes for you guys. It's going to play right after this. And if you guys want to watch the full webinar, I'm going to have the full webinar link down in the description below. With that being said, guys, this is your boy Rico, aka RockStarrFX. I'm out, but don't click off the video just yet. Watch this.
But what if you could use the advantage of the pit where you can, essentially gain an audible edge as to what people are doing, and apply that to their electronic markets? And that's basically what we've been trying to do. And we're doing it using something called order flow. Really simple. And it's one of these things that people really seem to complicate and make very, very difficult to understand. I'm sure you guys have seen a bunch of these order flow charts that people have up that have a very large amount of complex information that's changing incredibly quickly. But order flow is incredibly simple, right? It's basically the orders that are taking place at any given point in time, right? It's time and sales, this type of information. It's the buys and sells, what is actually happening in the market right now. The problem we have is that this information, there is just a huge amount of it, and it's not always easy to see what larger traders are up to. It's not always easy to see when there's a flurry because there's just so much information. So what we do with TickStrike and what we do with our product is essentially analyze the rate and the size of order flow, right? We analyze the rate and we analyze the size of order flow. So a lot of people presume that, you just got to look for large trades, like 100 contracts, 200, 300 contracts plus, and you'll be able to see what the whales are up to. But they're really good at disguising what they're up to into smaller trades because a lot of it's done algorithmically, chopping those trades up into much smaller trades. We found that following just what large trades, the large contract trades, it was not an effective methodology to be able to see what was actually going on. What makes sense is to make a relative comparison between the rate of order flow and the size of those orders, right? The rate of orders going through and the size. It feels obvious when you really think about it. And I used a very important word there, relative. So that the order flow is relative to the market environment, relative to what's happening at that point in time, the volume at that point in time, and what is taking place in the market. So that is the key thing that we analyze, the rate of order flow and the size of those orders, and we make a comparison there. And that's what makes the sound and everything that you hear. So ultimately, what we end up with is this. This is a meter that allows us to essentially visually and audibly indicate what is happening with, in this case, the S&P pit, right? This is our pit for that particular market. It's an audible and visual representation of what is happening in that pit. Okay, do those concepts make sense, guys? Give me some yeses if you're with me. So we've gone from there is an advantage in the pit being able to hear traders and what they're up to. And, when there's a flurry of traders screaming and shouting at each other, something's taking place. There is some action happening. And then with the decline of the usual pit, we've got this electronic environment. And with the electronic environment, we're now able to see all of the order flow in one place, but we just need a way to simply interpret it. And that's what this meter does. That's what it's designed to do, is allow you to very simply and easily interpret that meter. So then we move on to the next core ideas. The way that you would use this type of order flow information, there's a few different ways, but they have three main headings: correlation, volatility discovery, and trade management. So what do I mean by correlation? Let me kind of run through some of the core ideas here that I hope you can take away with you and apply to your trading, and hopefully you'll find them interesting. So what we've got here are essentially three different pits. We've got the pit for the S&P, we've got the pit for the NASDAQ, or we've got the pit for the YM. This is slide one. So we've got three different pits. They're all showing red. Then we've got a second slide where we've got three different pits. Two are showing red, one is showing green. Now, what we do know is that the S&P, the NASDAQ, and the Dow, they share a consistent correlation of over 85%. So 85% of the time, these markets move together. So in this example, I'd like you to answer in the text chat, which slide one or slide two, do you think will have the most momentum behind a move? Slide one, where everything is red, or slide two, where a couple of things are red, but you've got one that's green. Bunch of ones coming through. Really straightforward, guys, right? Everyone's understood how to apply correlation to their trading. And that is it. That is the core concept, where the hardest part of it is being able to get the information in a way that's easy to consume, that's easy to understand, and that you can make objective decisions with. Then you have things like trade management, right? When you're managing a trade, one of the most difficult aspects of managing a trade is being objective in what you're doing and what you're seeing, right? What you're looking for is when you enter a trade to know pretty quickly if that trade is either going to go against you or going with you. What this kind of information does is it allows you to actually listen to the flows, listen to what's happening in the market, correlate it, and move, with with what's happening at that point in time. So if you hear sell action against you, you can exit that trade very, very quickly. If you hear buy action confirming what you're doing, you hold on to that trade longer. It kind of simplifies that information, makes it easier to, immerse yourself in the markets, because it's a full sensory experience, right? Visually, you're looking at your screen. We've got FX, we've even got crypto now. So we've got a bunch of the big cryptos. We've got all the major FX pairs, and we have Brent crude, we have CL, and we have a bunch of the ETFs as well. All right, so I'm going to give you an example here of momentum. So we've got the TickQ kind of indicating that there's a level of reversal taking place, and now we're seeing a bunch of stocks here kicking in, showing us strength. Because the key thing is alignment. The key thing is alignment. When you have alignment, that's when you have strength behind a move. You're not trying to predict every single movement of the market. That would be insane. That would be not a good idea. That's the best way to destroy your account. But what you're looking for is probability. You're looking for an edge. You're looking for an edge. And in my opinion, the best edge is when you have the largest stocks within an index aligning with each other. Okay. Another interesting use case is news trading. So this is earlier on today.
10 seconds.
And you've got the squawk in the background as well. I'll kind of.
Hike 25 basis point, hike 25 basis point, hike to 0.5% as expected. Bank of England corporate bond purchases 0 billion. That's lower than the forecast of 20 billion. The Bank of England MPC vote
So
unchanged,
down,
0,
and then it
that's lower than the
reversed.
Forecast of 1. The Bank of England MPC vote hike 9, that's higher than the forecast of 8. And the Bank of England MPC vote cut 0, that's in line with the forecast of 0. Let's take a look at the market reaction. We're seeing cable strengthen.
So you can see, especially with news events, because it's kind of micro time volatility, you get these massive moves and you've got the correlations there. You can see the markets moving together. It's just a crazy time to trade. So if you've got non-farm payroll coming up, you've got a bunch of different, we've actually got non-farm payroll tomorrow. Trading stuff like that is quite interesting because you can correlate the different indexes together and see the strength behind a move.
I feel just like a rock star.